Hello there. You are welcome to today's updates. As we move gradually to the final days of the BRICS 16th summit in Kazan, Russia, the seat for its summit this year, expectations are soaring high. With many expectations on what BRICS has in store this year towards its agenda to move the world from unipolarity to multipolarity, de-dollarization stands as a major topic it seeks to handle. As many nations prospect to join its bloc, and we see gold prices surge in the markets daily. What is going on? We have more, and these covered right here in this video. Do stick around in the next couple of minutes, and don't forget to subscribe if you are just tuning in. Also, do like and share as a means of supporting what we do. To begin with, the BRICS Plus countries in July announced the creation of an international payment system designed to bypass SWIFT transactions. Records of high gold prices have rekindled the debate on whether and how the BRICS Plus countries can achieve their aim of displacing the dollar's role in the world financial system. The benchmark LBMA gold price in London settled at $2,500 on the 19th of August, the highest in the association's history. There is no doubt that gold has reached new highs on the back of massive purchases by BRICS Plus central banks, as well as private Chinese buying, says Steve Hanke, professor of applied economics at Johns Hopkins University in the US. When it comes to world happenings and gold markets in recent years, BRICS is a term we hear more and more in the media, whether we are talking about geopolitical relations or the commodity market, such as gold. But what exactly is BRICS doing with gold, and how does it affect world markets? Since 2006, BRICS has been trying to build mutual economic and political cooperation and parallel financial institutions through which it will perform on the world stage. In 2014, the BRICS countries established the New Development Bank and the Special Liquidity Mechanism, CRA, with 46 billion euros to reduce the influence of the IMF and the World Bank. Now let's take a look at what BRICS means for the dollar in recent times. At first, the name BRICS might have seemed more or less insignificant to the US or the dollar. But now, the BRICS countries are increasingly conducting trade in currencies other than the US dollar. This particularly applies to the trading of oil and its derivatives to reduce the impact of the petrodollar. Among the 40 countries that want to join BRICS are Argentina, Mexico, and OPEC members, Iran, Saudi Arabia, UAE, Congo, Gabon, while Egypt, Nigeria, and Algeria are also unofficially mentioned. China already trades with Iran, Saudi Arabia, and Venezuela in yuan, and intends to do the same with former OPEC members, Qatar and Indonesia. The 10 countries that make up OPEC are important because they hold 2/3 of the world's oil reserves. On top of that, Brazilian President Lula has proposed a common trading currency between BRICS and the countries of the Mercosur Trade Organization, which includes most of South America. A little more than 2 decades ago, the share of world trade that took place in dollars amounted to 71%, and today it is significantly less, 58.4%. The trend of de-dollarization is obvious, although the dollar will remain the world's reserve currency for at least a few more decades. But the problem lies in the fact that, as time goes on, more and more dollars will flow from the world back to the US, which could contribute to rising inflation. Moving on, as we count down to the 16th BRICS summit, the BRICS bloc has been raising expectations toward its currency creation goals, with more accumulation of gold by BRICS nations, bringing about surging prices in the markets. Recently, proposals and announcements about the launch of a common digital currency related to gold and other rare metals can be heard more and more frequently from the BRICS countries. According to the latest research conducted by the London-based company Cross-Border Capital, a BRICS introduction of the gold standard would be the most significant event from a global financial point of view since the abolition of the gold standard in 1971 in the USA. Why the surge in gold prices in the markets lately? The central banks of the BRICS and associated countries have significantly increased their gold reserves in recent years, and when their holdings are added up, they appear to have overtaken the United States itself. The logic of these countries is that it makes no sense to trade and accumulate dollars when they turn into worthless paper from decade to decade. Since 1971, when the US dollar became fiat currency without coverage, it has lost over 86.6% of its value. The BRICS countries also want to reduce their dependence on the US. and they aim to achieve this by gradually moving away from the US dollar. Since it is unlikely that they will accept only one of the many currencies that these countries use instead of the dollar, gold is seen as a natural solution. It is not anyone's national currency, but is appreciated by all. What does all this mean for gold? If the BRICS and the countries that plan to cooperate with them really introduce the gold standard, this could further increase demand for gold from their central banks. On the other hand, the de-dollarization trend could increase inflationary pressures in the US during the coming recession, which would also encourage investors there to invest in gold to protect the value of their assets. Such an increase in demand would certainly drive significant growth in gold prices. All this shows that gold remains valuable, and debates around it are still intense. Previous claims that gold is obsolete and redundant in the modern world have proven short-sighted and wrong. Now, here's what you need to note regarding the surging gold prices in world markets lately. Perhaps the BRICS agenda to create a new currency is gradually taking center stage, especially as their 16th summit draws closer. Also, with the prospect of the bloc increasing its membership after the summit, the West and the US may need to take precautions in managing the accumulation of gold prices to secure the place of the dollar, while hindering the creation of a new BRICS currency. The potential BRICS currency would allow these nations to assert their economic independence while competing with the existing international financial system. As we already know, the current system is dominated by the US dollar, which accounts for about 90% of all currency trading. Until recently, nearly 100% of oil trading was conducted in US dollars. However, in 2023, 1/5 of oil trades were reportedly made using non-US dollar currencies. Central to this ongoing situation is the US trade war with China, as well as US sanctions on China and Russia. Should the BRICS nations establish a new reserve currency, it would likely significantly impact the US dollar, potentially leading to a decline in demand, or what's known as de-dollarization. In turn, this would have implications for the United States and global economies. During the first US presidential debate between former President Donald Trump and current Vice President Kamala Harris on September 10th, Trump doubled down on his recent pledge to impose strict tariffs on nations seeking to move away from the US dollar as the global currency. He is taking a particularly strong stance against China, threatening to slap 60% to 100% tariffs on Chinese imports if elected. It's still early to predict when exactly a BRICS currency will be released, but it's a good time to look at the potential for a BRICS currency and its possible implications for investors. We can see why measures are being taken to curb the purchasing power of countries regarding gold, a wise move towards preventing any impending dangers that might threaten the dollar in the days ahead. Here is where we wrap this video for today. Hope you found this interesting. Do stick around for more updates right here on our channel. Thanks for stopping by, and see you in our next video. Goodbye for now.